Hello and welcome. I'm Harsh Saita. You're watching NDTV Profit. With me is Mr. Girish Kousgi of PNB Housing to talk to us about, of course, the Q1 numbers as well as what's in store going forward. It's a very steady and strong set overall from PNB Housing. Growth continues to remain slightly soft, but nonetheless on the retail side, into the teens in terms of the growth. Corporate still degrowing. So, sir, my first question on that, how does growth really shape up both in corporate and retail going forward? Do you expect stronger growth to come through where corporate is concerned, and how will that add to your overall growth?
Good morning, Harsh. Thanks for having me here. So if you look at the growth, we have been focusing on retail since last little over 3 years. Now, if you look at retail growth, it is 14.4% YOY. So if you look at all the quarters in a year, generally quarter one is soft.
Yes.
For us, quarter one was very good. And this will continue in the balance quarters. Our focus is largely on retail. Corporate book is degrowing. Today, overall book is about 67,000 crores. Out of that, corporate is little over 1,800 crores. So we plan to start corporate this year. Corporate is going to be very, very small. It will always be less than 10% at its peak. So 90% is going to be on retail. Retail is growing at more than 14%. We will take that to 17% this year.
Understood. And you've grown or rather you've grown your branch presence. Talk to us about what geographies you're entering and what's different this time around with regard to the cycle itself.
So if you look at a branch expansion in last 1.5 years, we've added 180 branches. So today we have 303 branches. Out of that, largely the expansion has been on the affordable and emerging, which is high yield business. So today we have 303 branches. If you look at last year, the entire business was done from 200 branches, because 100 branches we opened between December to March. Now this year we will have 100 plus another 3 branches which we opened in quarter one, which will start contributing. So we have a great story on the growth on retail side. Corporate we're going to restart, and this would definitely help us, especially on the government PMAY, yet to be announced, in the sense the nitty-gritties of the scheme will be announced in next 3 to 4 weeks time. I think that's the big story for us.
Got it. And how much of your book comes from PMAY? Because PMAY has had a significant dent on the housing sector overall over the last maybe around a decade or so. What's the thought process and what's the kind of impact on your book is what I want to try and ascertain.
See, if you look at last 2 terms, this was started in the year 2015.
Yes.
So in about 7 to 8 years time, the amount utilized was 1,65,000 crores. Now this time, the overall investment in housing is 10 lakh crore. Government allocation is 2.2 lakh crore for 5 years. So this time it is going to be massive. It's going to be very good. I think if you look at the intensity, because this time I think even the authorities, government wants to kind of market this, right? And therefore demand is going to be huge. To that extent, all our branches, initially the thought was only the affordable branches will cater to PMAY. But now all the branches, whether it is prime, emerging or affordable, all 303 branches are geared up. Now there are 3 benefits in this. One, demand will drastically go up. It will help every housing finance company which is largely into affordable and emerging to grow much faster. Number 2, the funding which comes under PMAY to the lending institution is going to be at a lesser cost compared to earlier. This is second, which will bring down the cost of borrowing. Number 3, the margin on PMAY is going to be better this time. I think based on the interaction what we've been having with all the authorities in last 2 months, the sense what we're going to, what we have is that the margins are going to be better, the growth will be much faster because of this, and I think this is going to help the entire housing industry.
But sir, what's the lever for margin? Sorry, I want to understand that piece.
So I think this is my assumption based on our discussion. We have to still wait for the scheme. So what's going to happen is that the funding is going to come at a lower cost, number 1. Number 2, there's going to be a lending cap.
Okay.
Which means the margin will be fixed. the margin which will be fixed for PMAY will be much higher than our current margin, which is now 3.65.
Yes.
So it's going to be at least 80 to 100 bips higher.
Understood.
So in that sense, PNB is going to gain the more loans we do. If you look at till March 2022, we have done over 13,000 crores under this scheme.
Okay.
So I think from now till next 2-3 years, it's going to be humongous.
Understood. Got it. Okay, I'll talk about asset quality now. We've had a very benign cycle when it comes to credit costs. We are currently at negative credit costs. What's the kind of expectation going forward? You're growing geographies. You're doing higher yielding loans, as you mentioned. Does that come with a higher level of risk, and what's the kind of risk you're assuming on that?
I think risk in this business, blended credit cost for us ideally should be around 0.4. But I think for us, we will take a lot of time. At least for this year and next year, the credit cost is going to be muted. Topping that, we have a large written-off pool.
Yes.
So we have very good recovery coming in since last 2 quarters. I think that trend will continue for next 4 to 5 quarters. So credit cost is going to be muted. It will be around 25 to 30 bips.
Got it. And what's the recovery pipeline like? What's the quantum of recovery expected FY 25-26 over the next 2 years?
So this year, overall on the retail side, we would be able to recover about 180 to 190 crores.
Okay.
From the written-off pool. The overall pool on retail is 500 crores. On the corporate, it is 1,200 crores. We will recover that in next 3 years.
Understood. So that's a large recovery chunk also which will come through. Understood. Okay, and with regard to, sir, the way in which your margins are evolving, you're currently at 3.65. We've seen good pressure coming in from cost of funds for most NBFCs, banks as well. Banks seeing a lot of deposit growth pressure, liquidity in the system stretched. What's your sense with regard to margins? Can you hold on to 3.65?
So if you look at the last couple of quarters, we got a rating upgraded from AA to AA+. That helped us to bring down the cost. Cost has come down from 7.98 in Q4 of last year to 7.92. Incremental cost of borrowing is 7.75. For us, deposit is a good story. We have grown by 7%. Now the book is over 18,000 crores. Now talking about margins, our guidance is 3.5. So we'll be, today it is 3.65. We'll be able to maintain around this level for next 2 to 3 quarters time. And then because of segment change, restart of corporate, and there is some leeway on getting the cost down because of renegotiation, because of the rating upgrade, and also PMAY. So after 2-3 quarters time, I think the NIMs will start inching up.
Understood. Oh, okay, actually inching up. And, so my last question is with regard to investors. Of course, you have a clutch of investors within your fold, some of them also partially divesting. Do you expect, are there conversations with regard to more divestitures coming, or do you believe that they're here to stay now?
See, we don't really engage on this.
Okay.
So if you look at the investors, I think some investors have stayed invested for a long time. And a lot of new investors got in just before rights. I think it's a continuous process, and we are part of this entire ecosystem. And as a company, we focus on very strong operational growth, and whatever changes happens at the shareholding level, I think it's part of the whole game. We don't engage on that specifically.
I understand. Okay. Thank you so much, Mr. Kousgi. It's been a pleasure speaking with you. And thank you for coming in person and speaking with us and giving us all of those insights.